Well, what's up, everybody? Dave Payerchin, RJ Pepino here with the cream. In this video, we're going to be citing a few articles from the Wall Street Journal, and it's all talking about really how much equity, a massive amount of equity that homeowners in America, Americans have in their home right now. And this could be looked at a couple different ways. A lot of homeowners could or a lot of people could look at this and maybe you even see it online and on the interwebs of people saying, I'm going to wait till prices come down. Prices are too high. Yes, undoubtedly prices have increased massively. If you can see this little chart here, you can kind of see here since 2000. Look at the equity in people's homes. It's been absolutely ridiculous. Obviously, this is a perfect example of why inflation helps the rich. In this case, I mean, who is the rich? It's people who own assets. So when you experience inflation, if you own assets, you get to ride the wave. The rich get richer in times of inflation. You can see it right here on this chart. So right now, Wall Street Journal is telling us there's an approximate $35 trillion in equity in people's homes. Now, a lot of homeowners are not willing to cash in on that equity because that would mean selling their home and paying off a very low interest rate mortgage. A lot of these homeowners, the average interest rate right now in America is 4%. If you were to go to get a new loan, you got to pay 7%. So a lot of people are not willing to sell and cash in on their equity, but there's a lot of equity out there. And we're going to kind of talk about where we see the opportunity. But another article I wanted to cite here real quick. Not only do people have a ton of equity in their home, but rents, especially in these affordable housing markets. We love the affordable housing markets in the Midwest and other places, but the rents are not declining. We're seeing surges of evictions in more of the high dollar markets, specifically Phoenix. I just read a different article. We can pull that up on a different video. But Phoenix is experiencing massive evictions simply because in the markets, it's just like home values. In the markets where you see the rents run up the fastest, typically you see the biggest crashes, right? And that's with prices, with rents. It's been more stable. Yes, rents have gone up and been stable here in the Midwest, but we didn't see a massive run up. So therefore, we're not seeing a massive decline. So a lot of opportunity for us as real estate investors. A lot of properties out there, one, have equity, and two, the rents are staying stable in these affordable markets. RJ, what is your reaction on kind of how us as real estate investors can actually take advantage of what's going on?
I think what you just shared with us here is an opportunity. You got homeowners that we call that the lock-in effect. You actually mentioned that in another video that we did. The lock-in effect, basically, no one's wanting to trade their current interest rate for the higher interest rate, so they're just locked in. The good news is that there's still people there, even though that they have a 2 and 3% interest rate, maybe 4, they are in a situation where they have to sell and they have to get rid of their house problem because they weren't, and they're not in a financial, they don't have the financial wherewithal to keep it right now. They have a financial pain. And so us real estate investors who are always putting our feelers out there or always having conversations with motivated sellers will win. And you'll win if this slide here is saying that this is the U.S. rents declining, but not in the Midwest states. You're going to win in the affordable markets. We just so happen to be in one of the most affordable markets in the U.S., which is Ohio. Not only is it affordable, but it's also a landlord-friendly state. So, what this is telling us right here is like you point your marketing to motivated sellers, always off market, and we prefer the inbound channels, something that we talk about, always telling our students and our community to go through this inbound channels because those are the ones that are motivated. They're the ones filling out forms online. Everyone's online. I'm on my phone. I'm online, right? And they're motivated. We want to talk to you. And so that's the opportunity, is to always put your marketing in to motivated sellers, whether the rates are at 7 or the rates are at 2 or 3, because there's always somebody out there that has financial pain. And you're going to get a deal. It just has to pencil out. And I suggest that to point it into a market that has the steady rents or rents even going up, and that they're still affordable. Where
Yeah.
are people moving to for affordability? It's easy to find that. You can find that in Ohio. You can find that in Indianapolis, Kentucky, Alabama, even in Michigan. There's markets out there. And if you're in like Arizona, there's probably tertiary, we call those tertiary markets, kind of lower population markets outside of the cities where it might make sense still. But pay caution to those landlord laws there because we teach you how to keep the asset. That's what we're all about here. Keep the assets, which keep the best and sell the rest. And so you're going to do a little bit better, I feel, Dave, in Midwest markets where you're going to have tenants are not behaving. They can, you can make arrangements to get them out.
So what we're seeing, I mean, with the massive run up in home prices and home values over the last 25 years, a lot of homeowners have equity, but as RJ just mentioned, financial pain, some type of pain happens to all of us. I mean, life goes on regardless of what's going on in the market. And it's our job as real estate investors to be a problem solver. Put yourself out there as a cash buyer, as a home buyer. Believe me, people will take your cash offer if there's pain, if your cash offer is solving a need in the marketplace, which it is. There's always somebody who has a need for a cash offer, an as is cash offer. It's our job to provide those offers as real estate investors and get great deals. There's equity out there, right? So the equity's there and the rents are stable in these affordable houses or affordable markets, as RJ just mentioned. That's what we're specializing in. Regardless of where you live, we can teach you how to take advantage of the great deals that are out there. And that's what we're here to do. So with that, follow us on our social media platforms. All of our links are in the description. And if you want to set up a call about our coaching program, there is a link for that as well. As always, we appreciate you, and we'll see you on the next video.